I think we're good. Should we get started? Whoa,
Let's do it.
let's not bump the computer.
We're already gonna fire Michelle.
I'm in the axe.
Yeah.
Hello, everybody. I'm Michelle,
And I'm Steph.
and we are here to just bring you some information about real estate and mortgages and just keep it simple, keep it entertaining. We don't even really have much of a script to go off of, if we're being totally honest. Just know that we are here for your best interest. And if you do have questions, please add them into the chat or just DM us later if you're finding this on a recording.
Yep.
So thought we would start with just introducing ourselves, who we are, what we do, and why we do it. So I'm Michelle Baldwin with the home team. I'm the branch manager of our Fairway Home Mortgage team. We are out of Ramsey, Minnesota, but we go everywhere and we're licensed in all 50 states. I've been personally doing this for 25 years, which seems like, I know I started when I was 5. It's fine. And I love it. I love what I do. I love educating people. I absolutely get so much rush, like it's still my first day of work when I get to talk to somebody that has never bought and sold a house. They don't know what they're doing. They're really scared and they just need help. So it's my favorite thing to do. I have 4 children. They keep me very much so on the border of sanity. Triplet, almost 20-year-olds and a 6.5-year-old. So shout out to the kids if they're going to watch this at some point in time when they become homeowners. And let's see, for fun, I really love to be adventurous. So mountain biking is a big passion of mine. I love to hike, visit national parks, and just travel. And my favorite thing to do is working out, weightlifting, and just going on adventures. Like I'm the girl that could say, like, we're going on a plane tomorrow, pack for 60 degrees, and I would be like, let's go. So that's a little bit about me.
Well, Michelle's a little bit more adventurous than I am, my home buddy self. But I'm Steph. I own a building here in Monticello, and I should say I am the team leader of the Birch Hill Properties team, brokered by Real Broker. On our team, we have about 5 or 6 agents, and we all kind of specialize in a few different things. I have personally been in the business for almost 12 years. Not quite as long as Michelle.
But you started at 5 too.
Yes, yep. And Michelle and I actually met, what, 10 years ago?
Right? Yeah.
When I was at one of my first brokerages. So here we are today, reconnecting and helping educate you all. But yeah, so I actually office out of Monticello, Minnesota, and we do service everywhere in the Twin Cities. I have sold homes, man, all the way up past Brainerd, Alexandria, and all the way down south of the cities. But I do specialize in the Northwest Metro and the Twin Cities of Minnesota. Let's see, a little bit about me. I have 2 kids. They love to play many different sports. And so we're a big sport family. We live here in Monticello as well as where my building is. And we also live on a hobby farm. So we love animals. I have cows, animals up anywhere that you can think of. Don't have any goats. So before anybody asks, that's probably my next thing that I'll be adding. Let's see. Couple things about my hobbies. So I love to go horseback riding. That's one thing that I have done for many, many years. My daughter and I compete in a few different events. And I also too love weightlifting. That's actually something Michelle and I bond over. We both have dabbled in the bodybuilding world. But yeah, I absolutely love real estate. Like I said, I've been doing this for about 12 years and it's been a passion of mine. And I actually parted from a team about a year and a half ago now and started my own team and bought this building that we're sitting in right here. And I'm looking forward to just continuing to add value to those who want to buy and sell and continue to educate. So
Awesome.
Let's get started with questions. Where are we at?
Started, yeah. We can either get questions going, or if we want to, we can roll into maybe just explaining the process, right? Like, how do you buy? I want to buy a house now. What? People don't know what they don't know. And that's the best part about us being here together collectively to help with that information. So the very first thing that you have to do in the process is figure out how much you can afford, right? Are we going to go look at? Is Steph going to go show you $300,000 houses or $3 million houses? We don't know because we don't know what we don't know.
And how do we figure that out, right? That's the best part, right?
Yes.
So we don't know, right? So Michelle, tell us what you know. How do we get started getting a mortgage? What's the first thing we do?
Yeah. Yep. The very first thing that you do is get pre-approved. It is very different than pre-qualified. So some lenders will say, oh, get pre-qualified, get pre-qualified. You don't want to get pre-qualified because I will slow down with my caffeine intake for the next one, I promise. Because if you get pre-qualified, it doesn't give you the power and authority to go and actually make an offer. It's just looks pretty good. right? So you want to get the actual pre-approval letter with the details so your realtor knows exactly what you need to look for. The pre-approval process itself is 4 steps. The first step is getting a loan application, basic information, name, social, date of birth, where you've lived and worked the last 2 years, and what's in your bank account. Those are the big 5 questions that we ask. There's more, of course, but those are the biggies. You can do the application 3 ways with my team. We have mobile app, which is pretty cool. It's got a lot of actual good knowledge and information and a calculator. I have a website with the same information, or we can just do it on the old-fashioned telephone. I like to do those too. Once we get the application, we do a soft credit pull, so it has no negative impact on your credit at all. You can do those every day and it wouldn't have any negative impact, although I don't know why you would. And it's good for 120 days. The next step would be document gathering. So I'll look at your credit and I'll say, okay, based on your application and your credit, I need these 4 or 5 documents: W-2s, pay stubs, bank statements, things like that. And then my little brain brings it all together and we do a pre-approval. We'll send an email with the pre-approval details out, and then we'll follow up with a phone call so you understand what those details mean and you're fully educated and excited about the next steps, which are Stephanie's job.
Shopping for homes. That is it. Thank you. So after, I should say, you get pre-approved with Michelle, right? She's going to say, hey, you are pre-approved, not pre-qualified, pre-approved up to a certain amount, right? And I would assume in that process, one thing that I usually go back to the lender for is having maybe doing, what do you guys call it at Fairway? A fee sheet, right?
Yeah,
Where they
like
can
a loan
break
worksheet.
down, hey, like you may be pre-approved up to 600,000, but do you want to spend 600,000, right? And that's usually a conversation that happens, I would say, between you as a buyer and the lender, but that does sometimes come to the agent, right? Because that helps us determine where you're actually going to shop, what you're going to shop for. You could be shopping and want to live in city A, right? But maybe we can't afford the taxes in city A, right? So that's kind of where we all kind of have this intertwined web, right? We all work together to make sure that, we have your best interest, right? But after we nail down what you can afford and what you should afford, then we start, usually I'll set you up on a home search. If you tell me, hey, I want to be in city, maybe I want to live in Monticello and St. Michael, but Big Lake is a little bit too far, right? We'll set you up on a one home search straight from the MLS portal. I always suggest that because then you're getting stuff in real time. And if you go and search Zillow, not that Zillow and Realtor.com are bad, they're fantastic sites. They're very searchable. They're really easy. So I'm not going to deny that. But it's secondhand or third hand information, right? So it could be listed 3 days prior, but maybe not, it doesn't get to Zillow until day 2 or day 3. Well, that house could already be gone or the information might be wrong. So getting you the information right away as it comes straight from the MLS is the easiest way to home search. So once we kind of nail down that criteria, we'll get you set up on that. The next thing we'll probably do before we go to see homes is we're going to sign buyer contracts. And in the state of Minnesota, we actually have to sign those before we go out and see houses. And that's something that has actually changed in the last couple of years based on the NAR settlement. So we'll get those signed. We'll go through all those, exactly what they mean, what to do, what not to do, right? But all that, representation means is that you're choosing me or whatever agent, right, that you choose to represent you in that transaction. So we're going to go out, we're going to be your advocate for you. We're going to help put a purchase agreement in on a house, and we're going to basically advocate and negotiate on your behalf for you to go and purchase that house. Those are probably the two main steps first, once you get your primary number that you want to shop around. And I can say those things change. There's many times where I'm working with a buyer and somebody will say, hey, I'm comfortable spending 500,000 on a house. And then we get to searching and they're like, man, interest rates really fluctuated. Now I don't think I can. Maybe we need to change my search criteria to include this city, or maybe I need to move it down to 450. That is completely normal. Happens all the time when we start our search, that you will change your search criteria and your number, believe it or not.
Yeah, absolutely. Really good points. Yeah. The nice thing about pre-approval and this process, this initial process, is everything can change,
Yeah.
including interest rates, including new houses that come on the market. I mean, just everything. So it's really important that through your search and through your process, you just continue to have that basketball toss back and forth with, okay, this is the house. Or you look at 3 or 4 houses, you're like, ew, no, I'm going to have to look at my search to go higher. Then you can relook at your budget and, just working together to make sure that you are comfortable with the payment and it's going to fit your needs, the house.
Yep.
So I do see that we have a question in the chat, so I am going to pull that up. The question is, when should I buy a house? How do I know when it's the right time to buy?
I like this one.
It's a great question.
you want me to take this one?
You can start and
Okay.
I can finish
Yeah,
up.
because I think there's a couple good ones here. Okay.
Definitely.
So when should I buy a home? I always say the perfect answer to this is there's never a right time. I know that's a really kind of a jaded answer to that question, but there really is not a right time. It's when you're ready to buy the house, right? And that's why we have a lender, and the lender actually will bounce off that, right? So I believe that, and I try to say it like this, that when you're buying a house and buying and selling real estate, you got to look at it as an investment, right? And you're making an investment in your future. It's a lot of money. It's your money, it's your personal finances. And I look at buying and selling real estate as how do you protect your return on your investment, right? So if it's going to be a bad purchase, you're not going to be able to afford the house, those types of things, then timing might not be right for you. If you know that, hey, you know that you're going to be switching a job 2 months from now, may not be the best financial decision, right? To purchase a house. And your numbers tell everything on paper, right?
Mhm.
So there's that, but there's also what is your lifestyle like, right? And then I get a lot of questions on, well, I like to entertain or this. Well, maybe that house isn't for you because it's 2,000 square feet too small, right? Or your affordability isn't going to be right on your house, right? So a lot of it comes back to your lifestyle, what's going on currently in your life, right? So again, that's dependent on the buyer, but also the numbers,
Mhm.
right?
Yep. I know a lot of people out there like, I want to time the market, right? I want to time it so it's just right. So
Oh my,
the
yeah,
rates are at the lowest and the price points are at the lowest. And let me tell you, that's just not reality.
it's not going to happen.
No, I mean, I have people that have waited and waited and waited. The statistic out there that I heard last is every 1% interest rate that drops, 5 million new
Yes,
buyers come into the
crazy.
market. What do you think that does to the home prices? The home prices go up. So cool. Interest rates are lower. That's awesome. And now you're paying more for it. So it ends up equaling out. So, like to play that game, you can certainly try. And I will say people that have tried have typically failed. So, yes, the timing is your timing. When you know it's right to start even thinking about it or even starting to have questions about it, that's when you start the process.
Well, perfect example. Look what happened earlier this year, right? Interest rates went down a little bit coming into the year.
Mhm.
My phone was ringing off the hook, right? And I know Michelle was really busy. And now interest rates did creep up a little bit. People are sitting here a little bit, and they're not making as many moves. They're
Right.
overthinking what they're doing. So I'm like, yes, interest rates do directly affect, you buying and selling a house and your affordability. I think the best word in this is like it dictates your affordability on what you can afford.
Yes, yes. And like Steph said, it is an investment. It's not a get rich quick scheme, right?
Like,
So if you're buying a house and now is a good time, but you're like, oh, I'm nervous because rates are now at 6.5%,
yep.
and I don't think I want that rate. I want a lower rate. This is a stupid saying, and I really, really don't like it. And I'm going to say it anyway. You date the rate and you
Maybe.
marry the house, right? We can always refinance. You can always get into a lower term to save money that way in the long term. But I tell you, when rates go down, prices go up. And that is an absolute truth. We've seen it time and time again. So
This is also like on this topic. Sorry, Michelle, just
that's
to
okay.
add to that. But when you say, you date the rate and you marry the house, and people say, okay, well, I don't want to buy a house right now because interest rates are at 6%, let's say, or 6.25. I always say back, can you afford it? If their answer is yes, then it is not the wrong time to buy the house financially.
Mhm.
When it would be the wrong time to buy the house is the next question. Does it fit your lifestyle? And do you have other outside influences going on in your life, right? But when you go back to the financials of it, what she just said, if you're going to buy that house at 6.25%, guess what? At some point, interest rates are going to go down. Then you're going to go back to Michelle and you're going to refinance. Okay. And then guess what? You're going to be keeping money in your pocket. So
Mhm.
that is a good financial decision, right? Because the
Yeah.
down payment situation doesn't change. You're just going to buy the house, pay it down. You're still going to build up equity the same way because once you buy a house, typically, 99.9% of time, your home is going to appreciate, right? That's the type of market and economical value it has, right? So you're going to be able to refinance it, put money in your pocket.
Yeah, I mean, if you're buying a $400,000 house at 6.25 and rates go down to 5.5, that $400,000 house is not going to be $400,000 house anymore. It's
Yep.
going to be way higher. So,
Yep.
anyway, I feel like we're beating the dead horse on
Yeah.
that. I see another
Makes sense though.
question that says, you mentioned not changing jobs during the process. What other things should I avoid during the purchase process? Well, those are also very dependent on the situation. I do have people that have changed jobs, and I say that's not wise. I would 100% of the time say when you're looking at buying a house, don't buy a car, don't buy a boat, don't finance anything extra. Okay. I even sometimes say don't pay anything off. Like You just want to leave, once you're pre-approved, you want to leave everything as it
Easy
is.
peasy.
Yeah. If you're going to get a gift from somebody, like talk about it with us, to share
Yes.
any different things that have changed. When you change a job, if you change from W-2 to commission or to W-2 to 1099 or, going from a salary to something else or changing careers, I mean, all of that can affect your pre-approval. Being late on payments can affect your pre-approval. There's just so many things. So when you're in that pre-purchasing process, however short or long it is, just kind of try and keep everything as stable and steady as you can.
Oh, there's another question up there.
Okay. How much money do I need to have saved before I start looking for a house?
Oh, that's another.
Well, fun fact, yesterday I had a pre-approval that came through and they had $48 in their bank account.
Oh, yay.
My suggestion would be maybe a little bit more than that.
And not just for the down payment, right? Because
Yes.
that's one topic, but
Yeah.
also because you need to plan a little bit. What is no house, whether you're doing new construction or an existing home, no house is like fool or fail proof. There's always something, right? Like this is risk 101, right?
Yeah.
Like assess your risk a little bit, but yes, then there's the down payment aspect, right?
Yeah. And you even need things like a lawnmower.
Yeah.
I mean, if you're renting an apartment right now and you go into buying a house, someone's got to mow your lawn.
Yeah.
You got to buy that.
Yep.
So anyway, $48 is maybe not the right answer. A lot of people though think that 20% is the target.
Yes.
And I actually have a fun myth buster. 20% down will actually get you a slightly higher interest rate because the lender won't yield as much profit off of it. And they want that mortgage insurance. Mortgage insurance, just as a mortgage term and quick definition, is not helping you at all. People love insurance because it sounds like, oh, insurance, I have insurance, I'm so happy. No, mortgage insurance protects the lender so that if you were to default on your payment, the lender can be made whole with that policy. It's required anytime you have less than 20% down and on some government loans. So
Yep.
that's what mortgage insurance is. But how much do I need to have saved? I always like to use the raw number of at least a mortgage payment worth.
Yes.
Right. So there are programs out there that are truly zero down. There's a USDA program, there's a VA program if you're veteran or you're buying in a rural area. We also have several down payment assistance programs that only require $1,000 out of your pocket. So at a minimum, $1,000 if you're not a veteran or buying in a rural area. And if you're going to get a $2,500 payment, I would try and have at least that in the bank. But you definitely don't need 20% or 10%. And even some people that have that, I suggest that they save some of it for those rainy day things, for a furnace that goes out. My AC just went out and it cost me $300 to fix. Thank goodness I didn't need a new one 2 days ago. So like those things with home ownership just come up and you've got to know how to kind of handle them. So,
Yep. Oh, does the amount I put down have an impact on if my offer will be accepted?
ooh,
That's another good one.
that's a good
And
question.
sometimes it could. When you get into multiple offer scenarios, I would say that would be something that, I mean, if I was counseling a seller, they probably would because they would look at it. I shouldn't say they probably would. That's maybe a bad thing to say. They could consider it, right? Because when you have multiple offers and you lay them out, they're going to look at the best well-rounded offer, right? Obviously, we have the saying in the world where cash is king, right? Somebody gives a cash offer. That means there's no appraisal, there's no financing tied to it. Nothing could happen down the process. The buyer's not going to fall out of financing as long as they have a pre-approval of funds or a proof of funds. Typically that would be considered the strongest offer. But yes, if you're going up against, I would say an FHA, buyer that is maybe 3.5% down versus a conventional buyer that's 30, 40, 50% down, what that would show a seller is that you're probably the stronger buyer. So if there was an appraisal issue or something like that, we might be able to move and shift around funds so that you can still bring money to the table to buy the house, right? If there was another negotiation. But I will say not all the time does it matter. It would just be usually I would say in the multiple offer scenarios.
Let's say as the market heats up, right?
That's
when those
yes,
rates drop
yes.
down, when that market heats up, when all those buyers are coming back in and the sellers are like, look at all these offers I have. That's probably when
Yep.
it'll be affected the most. Right now, we're not seeing that. So
Right.
right now, I have a lot of buyers that are doing FHA 3.5% down, conventional
Yep.
3% down.
Saving some money in the pocket.
Yep. And they're comfortable with that payment. On all of the mortgages that I do, you can pay extra principal to the
Yep.
payment. So if you have a little bit more that you want to put aside for paying down the mortgage, you can do that. So all of those things are definitely viable options.
Yep. Yep.
Okay, one more question. Thanks for all these questions that
Yes.
keep coming in. They're helping us flow well. My credit is less than perfect. Do I need to get my score up before I can purchase a house? Typically, it depends. The tricky thing about credit is that there's not all scores are universal. So the first thing that you need to know is when you're looking at your credit score online, you might be looking at Credit Karma or like your credit card has a statement that is attached to it. Those scores are a different model. So those are consumer-based scoring models. When we are pulling your credit, still both soft pulls, right? So they're not hard inquiries, but when we're pulling your credit, we're pulling a consumer or a creditor based. So we're wanting to give you credit, right? So it's a different model. I say that only to confuse you because it is confusing. I think it's ridiculous
Really confused.
and I would love to change it. And I am just
Everybody says go to Experian and check your credit,
right.
but it's not the same.
It's not the same. There are three bureaus, Experian, Equifax, TransUnion. When we're doing a soft pull, we just do two and take the lower. When we actually get into the offer and we're working through it and hard pull it, we do all three and take the middle. The minimum score, that's such a tricky question because I've done a credit score of 520.
Yeah.
I've done credit scores of 850. I saw one actually. People are really proud about their good credit scores.
I'm proud of my good credit.
When people work hard for it, it's good. I do not discredit great credit people at all. I love them. So the credit score definitely depends. If you had $200,000 in the bank, which is this borrower that did, they wanted to buy a $500,000 house, so they had plenty down to avoid the mortgage insurance and all that. Could go conventional. That 520 score, it was fine, no big deal. If you have $48 in the bank and a 520 credit score, we're probably going to need to do some credit counseling, which I have some great people that I work with, or credit coaching to help get your score up. A good benchmark would be 620. That would get you access to most of the programs, if not all. Down payment assistance is looking for 650 in the state of Minnesota. It's different in each state, but Minnesota has a 650. So just to give you those benchmark ideas to get the best conventional financing, which is there's two big buckets to borrow from: government loans and conventional loans. You're looking at probably 720 for the best. Okay. So credit 101. I could literally spend 30 minutes just talking about credit because there's so much.
I mean, there's and there's not one, one size fits all.
No, which is everything in this process and why it's really important to not just go to an internet lender that doesn't really know all this, that doesn't really care. They're just literally order taking. They're taking your application, they're running it through their automated system, and they're not going to know all of these details and intricacies.
I'll say, like, on that note, there's so many times I can think in the last almost 12 years where I've gotten an offer and it's been from, an online, hey, pre-approval, right? Not a physical person. And I'm a selling agent or listing agent where I do like to call the lender and say, hey, like, I just want to make sure XYZ PDQ. Not that I'm trying to get any information, but I just want to make, double check. And I want to make sure that the lender is going to be responsive during the process, right? Where, like, even as a buyer's agent, right? I do personally like to talk to the lender and make sure that, because a lot of times buyers, they're the consumer, right? They're not the expert. They're not the professional like, Michelle and I would be. So we don't know if what, maybe the lender is telling them is getting transcribed to the real estate agent, right? So I do like to have some sort of relationship, and, whether it's somebody I work with or not, or another lender that they had, maybe it's a cousin or something that they totally fine, but just to have an open term of communication, because you honestly, you never know. And I've gotten it where I've gotten offers on properties and I'm like, oh, they give me a piece of paper as a pre-approval. And then I realize it's a train wreck because they're pre-qualified really, but they're not pre-approved, kind of going.
My understanding was that there was one big national company out there that was actually incenting their loan officers, and I say that term loosely because I don't like to call people loan officers that don't have education and knowledge. They were incenting their loan officers to just get applications. It didn't matter if they were pre-approved. It didn't matter. It just, I need the application.
Makes you feel icky.
And they got paid for just doing that. Like, they don't know. And they certainly don't have your best interest at heart.
So. No, they don't. They don't. And I go back to firmly what I said earlier today. You're buying a house. It's an investment. Like, you have money that you're investing in your house, right? So it's protecting, like, the real estate agent and the lender that you choose to work with, they're helping you speak for your money, right? It's kind of
Mhm.
like a financial advisor in some way, shape, or form, right? Like bring that person into the mix. Great. I'd love to work with one. Like that is truthfully how I view real estate. So choose wisely,
Yeah.
right?
And we have another question. Are there certain loan types that are more likely to make an offer stronger for sellers? Yeah, we touched on that just a little bit. The when I mentioned the two buckets to borrow from, conventional and government, the government loans can have more strict property guidelines. So there are certain things in a property that a realtor will look for and will say, like, this will not get approved for government
Right.
loan. If you want to give a quick list of what you know to be
Yeah.
those things.
I would say, from obviously we talked about cash, right? So that'd be removing most likely the lender, but cash is always usually the strongest, right? Depending on what other terms come with that offer. I would say conventional for a seller is typically looked at as your next form of highest. And it's not that a USDA loan, a VA loan, or an FHA loan are bad by any means, right? It just really what it's up against, right? And as the borrower or the consumer, you got to go within your means, right? What you can get, because there's certain things like debt to income ratios and stuff, and why you're going to fit into a certain loan, right? But from a seller's perspective, I would say, they look at a conventional loan as being the strongest, and typically that you're a stronger buyer because they believe the debt, right? You can comment on that, but like debt to income ratios and stuff like that. Typically also with conventional, it goes back to what Michelle said earlier, most of them are putting a good amount down, the 15, the 20% plus if you're a conventional loan. And that just looks like, hey, if something were to go wrong with appraisal or whatever, they'd have some funds that they can move around typically.
What I will say is with FHA loans specifically, I won't say this with USDA and I won't say this with VA because those are good loans for very specific targeted people. With an FHA loan, and this is probably going to get in trouble for this from my community. I don't really care. We as lenders get paid more for a government loan than we do for a conventional loan typically. And you would not, as a consumer, get into an FHA loan if you didn't need to.
Right.
They allow
Yes.
for lower credit. They allow for higher debt to income ratio. They allow for a lower down payment. There's just not as many rules. There's a bigger, wider swath of people that can get pre-approved with them. So if you had 720 credit, you had money in the bank, and you're pre-approved for an FHA loan, I would say, tell me more about why you're picking FHA.
Correct.
Because you shouldn't be.
Yes.
There's no reason for it. And the reason is that FHA has permanent mortgage insurance. It's on there for the life of the loan. You never get it drop off. And there are stricter property guidelines. And your offers, like Steph said, less likely to get accepted if it were multiples.
Yep.
So those are the kinds of things that, you would want to look out for. We might have time for one more question if there is another one, but I don't know, that's a good stopping point.
I feel like it is. I think we covered a lot on like what to do, what not to do.
Michelle's
Look for
checklist of not
percent.
having as much caffeine next time.
Yes.
I'm all over the
All right.
place.
Aren't we all?
Both moms, we're both busy,
We're swooping in, swooping out.
we are. Yeah. Yep. We won't tell you what we did earlier today.
Yeah.
We're not going to talk about the rest of the
No.
day. But we hope you enjoyed this information. We're going to try and do this on a regular basis. So if you have questions, please reach out to us. Let us know how we can help. We are very non-pushy, non-in-your-face salespeople. I hate to even call us salespeople because we're just educating and we're passionate. Yeah,
We like to be
we're passionate educators.
add value through education and our experiences. Maybe that's a good way to say it.
Yeah,
Where
I love
Bill
it.
and I have been doing this for a really long time, and I think we both came to the realization that people have questions and they're not getting answered because they're Googling their AI or whatever it is that we're doing these days, right? And they're getting mixed answers. So we're here to help educate, add value. And if there's any topics or anything that you guys want to hear about that you're not, whether it's buying or selling or anything like that, like we're happy to maybe hop on and do a full webinar on that too.
Yeah. All right, everybody, take care. We'll see you soon. Stop the recording first.
Oh, that went well.